It's interesting that the street was completely off guard and out to lunch with respect to Friday's jobs report. And certainly this rate hike was the most anticipated decision coming up in a generation, but it is as overdue as week-old bananas. The Fed should have clearly raised rates a long time ago, and because of that, the conventional wisdom for stock market traders may not only be wrong in this case, but it may be dangerous. Because the conventional wisdom says if you think the Fed's going to raise rates, there are certain sectors you want to buy, and there are certain sectors you want to avoid. But in this case, that logic may not hold true. And simply stated, not only because the Fed is so late to the game, but also because the smart money has already made their decisions. You look at the move in the 2-year Treasury, that move has already happened. If you look at the sell-off in utilities, that move has already happened. The rally in the financials, the sell-off in gold, the sell-off in commodities. So those moves have already been priced in. So the danger here is you get this 1,000-point rally, but you have no improvement in fundamentals, in earnings, no improvement in the outlook for these companies. And the headwind for these companies has been that strong dollar. And that strong dollar is likely to be exacerbated by this Fed decision. So I think we want to be really thoughtful how we approach 2016 here. That doesn't mean there aren't opportunities, but I think you don't want to run with the herd and the conventional wisdom here, or you'll get trampled and stampeded by that herd, and that's where we are right now.
You just said everything was ahead of the move itself. So I thought you were going to argue that the dollar was already peaking then. You said everything else is already factored it in, but the dollar is going to keep getting stronger. That's illogical.
I love the way you listen to my comments. I appreciate it. All right, well, let's look at it this way. 2016, when you think about your game plan, forget the dollar for a second. Look at that Shanghai Express, right? Look at those emerging markets.
If it's in the market, then the dollar goes down from here. If it's not in the market, then the dollar goes up from here. You can't just pick which things are already in the market.
Good point. No, that's a fair point. Look, I think it is in the market. It is in the market, but it is still a headwind for corporate earnings because companies are a bunch of whiners right now, and they're complaining that that's what the problem is, as opposed to identifying that it's slow growth or bad corporate execution. It is in the market. It is in the market, and the dollar will revert, and the dollar will get back to where it belongs, and those emerging market currencies will have their day, and they'll have their rally, but not through year-end, because year-end, illiquidity in the market. There are a bunch of technical factors that swing in here. As you look at 2016, that's a very different story. Positioning for 2016, lots of opportunities to buy what gets hit at year-end because what's in the market, because of those technical factors, Joe.
So, Larry, you I think said don't look for much for the rest of this year, but are you bearish for 2016, or you like the prospects?
I think the prospects are going to be different than what we have right now, and I don't think you want to follow that knee-jerk reaction just to what the Fed is doing, because we know it's an election season. Anything is possible. The Fed wants to appear independent, so they may act in an unconventional way. You tend not to get the wheels falling off the wagon historically in a presidential cycle right ahead of an election, so I'll go with that history. I want to be appreciative of the fact that, you're more likely to see global stimulus, and even with respect to China, which was the big wild card here, China looks like it's transitioning from a manufacturing to a service-based economy. So maybe we start to see some fruits of that labor bear out in 2016. So I think take advantage of the weakness in a handful of sectors, take advantage of political silly season, and you'll find some bets, but don't follow the consensus here.
Okay. All right, Larry. Thank you.